Hello friends, welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Narayan Hrudalaya. Is it a buy at these levels or is it an avoid? So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Narayan Hrudalaya, his small request is kindly support me on Patreon. And once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts I put up from time to time. And even if you pay $100 upfront, you get 1 year access by paying for 10 months. For detailed market or company talk, you can directly email me and we can work things out with a fee. Now, about the company, established in 2000, it provides a medical and hospital facilities, and it is a rising hospital brand. They have over 5,000 beds across most parts of India, and they also provide diagnostic and daycare services. The market cap of the company is around 14,000, 13,500 crores, and the stock has not done much over the last 3 4 months, although it was doing extremely well in the early part of the year. If you look at the financials, then these are Q4 numbers. So sales went up by 12%. Profit was flat at around 68 crores. These are March quarter numbers. I have not included June quarter numbers because the presentation was made about 20 to 25 days back. There's high debt for such a business. I believe that the debt is high. It should be, you can say, a very asset light kind of a business altogether. So that is one more reason why the stock has not surged compared to other hospital brands. ROE of around 5.6% is not that great, although margins at 13% is decent, but they have to increase return on equity and some other ratios, and to do that the profitability needs to increase further. In terms of the performance, stock has surged in the last 15 months. So over the last, say, till April, from January of 2021, it has done exceedingly well, but have declined since May onwards, and until now it has gone down by around 20-25%. But it has been an outperformer till April of 2022, and then the decline took place. Results have been okay. I won't say results have been very good, but results have not been bad because you need to understand that the pandemic season is over. So there could have been a situation where the profitability would have declined sharply, but things are looking fine on that front. There is high promoter and institutional holding, as numbers are set to moderate in coming quarters as well. So I don't see numbers becoming better, because if you compare from FY21 till now, and now end of FY22, so if you compare the last 2 years numbers for most hospital companies, the FY23 numbers will not match that at all. So you would have to compare that with FY20, and so if you compare it from the last year, or the year before, the numbers are set to moderate in that respect. If you look at the current scenario, lifestyle change should help hospitals. So what has happened is people have become more aware of their health, and they are going to the doctor even more, so that they remain in good health. We may see some dip in numbers in short term because of, as I said, because of this change that now thankfully the pandemic is behind us. So the numbers should end up dipping. But a long term sustainable revenue stream looks very likely as people become careful of health, as I explained, and may have run up for the moment. So there could be a situation where the stock may just consolidate in this range for the next 2 3 months. But from a long term point of view, the valuation looks better than what it was in, say, March, April of this year. So things to become better once a scenario normalize altogether. I think there will be more travel, so travel related, you can say, business that would come in. Those travel from abroad, that happens, and there will be more business coming in from regular, you can say, patients that come in for other checkups or illnesses or surgeries, etc. So things would get normal, I believe, from FY24 or so. Next 6 months, we could see the stock may not surge a lot, but may not dip as well. If you look at the technicals, then there is strong support around the 540, 550 levels on a long term basis. Short term support lies around 615. The stock is around 660. It could very well go to 600 or so. The breakout is expected above 680. So once it crosses that, then we are seeing 750 and 800 on the stock. But I think it may just consolidate till October, as I explained, and then we could have a seminal rally altogether, and there we could end up making a good amount of money in all stocks, and as well as this one. So, in my opinion, better investment plays are available. I believe consumer should do well. I believe something related to weddings, festivals, etc. should do well over the next 6 months on a short-term basis. It can be a trading buy above 680, 690 if you take that with a stop loss at 10% lower, and then 750, 800 as a target. But even if you want to buy big time, then wait for further declines and maybe closer to 600, 580 you can buy. But I would look to buy into simpler businesses and generate wealth through that rather than buying into hospital companies. So this was my video on Narayan Hrudalaya. Please like and subscribe my channel, hit the bell icon so you get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.